Hi, I'm Max Keiser. This is the Keiser Report. You know, this begins a celebration of our 10 years of Keiser Report. Incredible, isn't it? I think so. Stacy?
Yeah, for the next quarter, we're going to be celebrating our 10-year anniversary. You know, because I like to do months-long sort of celebrations. My birthday is officially 1 month. Our 10-year anniversary is going to be a whole quarter, just so you know. And, you know, one of the themes that kind of has been constant in the past 10 years is this new paradigm shift. I remember over at Zero Hedge and Liberty Blitzkrieg, they called it the fourth turning, right? That there was a huge generational paradigm shift that was happening. And you could see that with the meltdown we're having with China and the trade war. And it's really about the sudden recognition, even though some of us have recognized it for quite a while, the sudden recognition that they actually could beat us in high-tech stuff. And it suddenly dawned on us, like, hey, wait, are we second rate to them? And we have the melt up in fiat, in these negative yielding bonds. There's a literal melt up happening there. And I think it's the beginning of the age of Bitcoin and the return of gold.
Yeah, I don't doubt that one bit, because we have now the deglobalization and de-dollarization, which will be superseded by the age of individual sovereignty. And the way to fund that is through Bitcoin. If you have your keys, it's unconfiscatable and it's hard money. So this is the first time ever in the history of humans that you've had an unconfiscatable hard money available to individuals. And this will give rise to a globe of individually sovereign individuals. The nation state will subside, and the role of fiat money will collapse, and we'll have a new era.
We at Keiser Report have been covering this emergence of this new era. You know, sometimes you make incorrect observations because you're only predicting what could possibly happen. But we've been remarkably accurate in terms of our assessment of what was actually going on. We coined it GIABO, for example, Global Insurrection Against Banker Occupation. And the banker occupation is really the central bank occupation in this fiat, where it was rigged. The system was rigged. And the fact that they could print money and give it to their buddies on Wall Street to then dispense to us. It was like one of these altcoins where they have a pre-mine and they give it to their friends, and the friends are supposed to disperse it. But we've had this situation of the global insurrection against banker occupation. And I want to turn to a tweet stream that somebody retweeted into my stream this past week. And that was a tweet I had sent on August 26th of 2012. So this was a year after we had started talking about Bitcoin. A little bit over a year, actually, after we started talking about Bitcoin on Keiser Report as a response to this global insurrection against banker occupation. And I had tweeted to John Matonis that other than this bullion basis episode, remember bullion basis, Sandeep Jaitley got fired for talking about gold on our show. I have to say our Bitcoin episodes have caused the most wrath and havoc. So in our comments, we would see that over and over, especially the gold bugs and the supporters of our fiat system, the Keynesians, they would be very, very angry if we ever talked about gold. And John Matonis replied, maybe you're onto something. Value economics is entering a strange new land. Cryptography is the differentiator.
Well, this is always the problem with journalists, comedians, and poets, in that the truth is always rejected. But it is the grist of the poet, the journalist, and the comedian to be ultra truthful, to be...
Just report what you see.
The wrath of the online community against our reporting on Bitcoin. At that time, Bitcoin was universally hated. I mean, people talk about it now, people on Wall Street are buying it, and it's become a Veblen good. You know, the fact that the price is rising, there's now people who are status seekers and consumers are buying Bitcoin because the price is going high. But back in 2012, when it was less than $10, and less than $20, people hated it with a passion, and they hated the fact that even we were talking about it. And yeah, a lot of people did buy it, and they did become millionaires.
That was the time period in which JP Morgan, some bankers at JP Morgan in London, we know firsthand from somebody who developed some software for them, that they were trading Bitcoin. They weren't allowed to at their office, so they had to create a special program through which JP Morgan would not know that they were actually speculating on Bitcoin. But they were algorithmically trading, because that's what these guys do. And the algorithm was tied to Twitter. And so anytime, Max, this is back in the day when you used to always move the price of Bitcoin. If Keiser Report talked about Bitcoin, the price would go up. That's happened again in the past week.
That's happening again, yeah. Well, yeah, that's true. I mean, I feel myself, Max Keiser, I feel I'm most closely aligned with Satoshi Nakamoto spiritually, and just I feel because of my work in the 1990s developing virtual currencies. So I feel I'm channeling Satoshi in a way that no one else does, and inspire people to buy Bitcoin the way no one else does. That's why we've created, hundreds of thousands of millionaires all over the world with, Bitcoin. And because the obvious connection to individual sovereignty and escape from the nation state and the tyranny of fiat money is obvious. And that message is now getting through to people like Joe Kernan at CNBC. He's now become a Bitcoin drone. Or not Art Carney. I'm thinking of the honeymooners. I mean, Mark Carney over there at the Bank of England in London. He's now almost gotten to the point of being a Bitcoin drone. He now is embracing digital currencies as a global solution against the dollar. The global insurrection against banker occupation, we started that really before Occupy Wall Street, before the revolution in Cairo, before obviously the Gilets jaunes in France or the protests in Hong Kong. They're all connected. All these protests are connected. They're all connected to a rebellion against fiat money and banks. They're all global insurrection against banker occupation. The solution for the Gilets jaunes is Bitcoin. The solution to the protests in Hong Kong is Bitcoin. The solution to the oppression in Egypt is Bitcoin. It has the same solution. You have all these groups are protesting. Once the penny drops or the Bitcoin drops and they understand this, then you'll see that $100,000 price pretty quickly.
Yeah, I think even before the Arab Spring, the so-called Spring, was the indignados in Spain. That's when we started to talk about the global insurrection against banker occupation. And it is the dawning of the age of Satoshi Nakamoto. And with that, I want to also talk about the culmination of a story. Again, Keiser Report was covering it. Rachel Maddow never covered this on MSNBC, nor did any other of the cohorts there at MSNBC. Another ex-JP Morgan precious metals trader pleads guilty to spoofing, is cooperating with feds. Another former JP Morgan precious metals trader pleaded guilty to criminal charges of manipulating the precious metals market for 9 years, marking the latest in the Justice Department's crackdown in the commodities markets. Christian Truns, 34 of London, is cooperating with an ongoing federal criminal investigation, the Justice Department said. He pleaded guilty to 1 count of conspiracy and 1 count of spoofing in the U.S. District Court in Brooklyn, and this happened between July 2007, he says, and August 2016.
Well, remember crash JP Morgan buy silver, right? So we identified that was maybe 7 years ago. We identified that JP Morgan was manipulating the silver price to feed a massive short position on their books that they inherited when they bought Bear Stearns. And if you drove the price of silver from 15 at that time to 150, you would bankrupt JP Morgan. We at Keiser Report, we got it to 50, which was a new all-time high by far. That was all us, from 15 to 50. But then, of course, the regulators came in and they allowed JP Morgan to expand their fraudulent activities by a huge factor. They fired Blythe Masters, who was orchestrating the whole thing, and they got the price back under to a level where they were comfortable with in terms of their balance sheet, and then they became net buyers. And I believe they are now the biggest owners of silver in the world. Going forward, the fact is that whether it's Wells Fargo, JP Morgan, or any of these other banks, they're actively engaged in massive fraud. They pay the small fine. Their business model is to keep 90 cents of every dollar they steal, pay 10 cents as a fine. But that's coming to an end.
They caught this guy. He admitted in court to spoofing, to rigging precious metals markets from July 2007 to August 2016. That's nearly 10 years he was spoofing markets, manipulating markets, and they slowly come about to stopping it. He said that he placed thousands of orders that he did not intend to execute for gold, silver, platinum, and palladium futures contracts. When we talked about the rigging of the precious metals markets, there are some precious metals experts that actually said, that's ridiculous. For every buyer, there's a seller. For every seller, there's a buyer. There's no way to rig markets. Well, here he's admitting to this, and he did it through a process called spoofing, a strategy that involves placing trade orders with the intent to cancel them before they can be executed. The goal is to affect the price of the commodity and benefit a pre-existing trading position.
Yeah, I know that it exists because my patented technology, the virtual trading system, goes into how you can rig trading by rigging the price discovery. Okay, it was then bought by a Wall Street bank, and they all work together, and they use this technology to rig prices. Prices are not the result of supply and demand. Prices are predetermined first, and then they add the supply and demand or trading activity to get to the price that they want it to get to. Right? So it's a complete repudiation of free market capitalism we now have. It's about a few people picking the price and then doing whatever it takes to get to that price. Does it sound like Soviet Union times when price objectives were more important than actual market benefits? Yes, and that's what we're living in now. A Politburo at the central bank and then bureaucrats at the banks who are rigging markets and rigging prices.
There are some conspiracy theorists who will say, like, this keeps a cap on the price of gold and silver on behalf of central banks and governments to maintain, the faith in this fiat system. But I think, as you see, I think it's just nickel and diming. It's part of the toll booth operators. They're nickel and diming, and it's just general rot and corruption of the system. They're taking pennies from
There's a natural buy order.
Yeah.
But to buy gold, when you see that banks are acting out of control fraudulently, so there's always a demand for gold. So if you can constantly clip those price movement up using massive naked short selling or spoofing, okay, you can always clip a few bucks, and if you annualize those rates of returns, they're extraordinary. That's how a lot of hedge funds can make a ton of money doing just this. So there's a natural demand. So if you defraud the market by selling negative rate interest rates, for example, and then you know that people are going to rush to gold, and then you can manipulate the price of gold, you've got a money printing machine. Oh, by the way, it is a money printing machine. On top of it, it's a hyper-leveraged money printing phantasmagoria that, through the Cantillon effect, benefits a few people like Jamie Dimon, who then has now declared he's concerned about the motives of his bank, and he wants to start helping starving African children. Jamie, you can do it. Go down there and hand out dimes.
This is the Roger Ver of the fiat world. And quickly, the last headline, Japan's pension fund warns of global investing losses. So Japan's pension fund is the largest in the world. It's $1.5 trillion. There's the government pension investment fund, GPIF. And they say global markets have become so synchronized that money managers risk losing on every front, according to Hiromichi Mizuno, chief investment officer of the world's largest pension fund. He said, quote, conventional wisdom of portfolio diversification is when we lose money in equity, we make a profit in fixed income, but we lost in every single asset class and lost in the currencies translations as well. That never happened in the past. So synchronized algo, bot trading, scalping, pennies.
Right, and that leaves only gold and Bitcoin. So the huge Japanese pension fund could be the one to break ranks and go into Bitcoin. And then you'll have FOMO, fear of missing out, and game theory kick in, and every pension fund will go into Bitcoin. Then you got $100,000 $1 million per Bitcoin. We're going to take a break. When we come back, much more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversation with Craig Hemke of the TF Metals Report. Craig, welcome back.
Thanks, Max.
JP Morgan has been caught, finally. They were spoofing metals markets back in 2016, just like you and I have been reporting. You know, we did a big campaign called Crash JP Morgan Buy Silver a few years ago because we correctly identified that JP Morgan had entered into massive naked short selling of futures contracts to manipulate the price, and they were exposed on their balance sheet to a price rally of silver. And we got the price from 15 to 50. JP Morgan's balance sheet was imperiled. They were about to have a massive write-down. And then the regulators came in and bailed them out, as they usually do. Blythe Masters was fired. But this kind of does prove our point at that time. And we came close to taking down JP Morgan, didn't we, Craig?
Sure was a lot of fun back then, Max. And you're right. The CME group stepped in along with the CFTC and raised margins, 5 times in 9 days, and everybody made a run for it. And a kind of a oft-forgotten part of that story was back in 2011, JP Morgan they were short all these contracts, 20, 30, 40,000 silver contracts, but they didn't have any actual silver. They were just playing a paper game, which, as you mentioned, left them subject to a squeeze. And that last month of April 2011, the CFTC data show it happening. The commercials were getting squeezed and the speculators were taking profits. Now you fast forward 7 or 8 years later, and we know what actually took place. JP Morgan was rushed through, rubber stamp approved, a COMEX silver vault. And now in that silver vault, we've watched JP Morgan accumulate silver month after month for their own proprietary account. And they've got about 150 million ounces, which means now when they short the market by creating contracts, providing liquidity, and all that kind of stuff that they've done to keep price in check, it's actually considered a hedge because they've got 150 million ounces sitting there.
That window of opportunity, we almost got them. Regulators, of course, are captured. Let's turn to negative interest rates, negative yielding debt. It was only a few months ago that there was only about 10 trillion in negative yielding sovereign bonds. There are now about 17 trillion. Even 1 trillion in negative yielding corporate debt. Your thoughts?
Well, Max, I've said since 2016 when this first came to the forefront, I think negative interest rates are the greatest fundamental for physical gold ownership ever created by man or central bankers, which I'm not sure are actually people. You look at it, what is always the argument? That traditionalist hedge fund asset allocator argument against gold. It just collects dust. It's a doorstop. It's a pet rock. It doesn't pay dividends. In fact, it costs you money. It has a negative interest rate because you got to pay to store it. Well, now, if the entire Switzerland yield curve is negative, the entire German yield curve is negative, the entire yield curve of the Netherlands is negative. If traditional safe haven assets are negative, negative yield, that makes gold look pretty good. You can see somebody coming down the hall behind me. That makes gold look pretty good in comparison. So again, why would you own cash? Why would you own physical cash if you're paying a negative yield to it, if you're paying the bank to store it for you, when you can own physical gold, which is also money? And yeah, you got to pay someone to store it for you, but it's probably less than you're paying the German government. So all of this is a very sound fundamental for physical gold ownership. And all of that's going to drive the thing we talked about in the last episode, which is more and more demand for gold in all its forms, which then drives price.
So in 2008, the global economy seized up in a global credit freeze. Banks were obviously insolvent. And now, 10 years later, we have these negative interest rates. It's kind of like the story of the Donner Party, where they eventually resorted to cannibalism to stay alive. So negative interest rates are banks cannibalizing each other. They're eating each other's balance sheet in an attempt to stay alive another 20 minutes. But they're all going to be dead soon enough. They're dying. They are deader than Jeffrey Epstein. Now, going forward, is this breaking of the laws of physics that accompanies the great paradigm shift? The economic physics, the economic laws have been broken completely, supply and demand crushed. And are we witnessing the end of this global fiat system, Craig?
Yeah, we are, Max. This is a symptom of it. And think about the craziness of this. The ECB is going to announce next month their next QE program, where they're going to overtly buy debt. Well, what are they going to be buying? They're going to be buying negative yielding debt. So they're creating new euros to buy debt, which is going to cost them money as a way of kind of pumping up the European bank system and providing extra liquidity. But at the end of the day, it's an end game that is terminal, because the traditional banking model, where you're going to borrow short and lend long, it just dies. It shrivels up and dies with negative interest rates. And so in the European sector specifically is where you're seeing the stress. I mean, Deutsche Bank's at all-time lows, right? Credit Suisse. I mean, you go down the list of European banks that are now really being pressured and squeezed because of negative interest rates. That's not going to get any better. And the way those banks have their debt structured, where Bank A owns the debt of Bank B, and Bank B owns the debt of Bank C. You get this counterparty risk there that could really ignite a renewed banking sector, let's just call it squeeze, crisis, whatever you want to call it, that will then shift over to the U.S., just like 2008. So, yeah, we're definitely at the terminal phase. The banks have created all this cash, sloshes around the planet looking for anything that it can that is considered safe. We're up to $16 trillion in debt that has a negative yield. Over $1 trillion in corporate debt, Max, has a negative yield. This is madness.
These high priests of finance, it's as if they are putting themselves in a position where they've screwed things up so badly, they are now praying for a miracle. A miracle, a meteor the size of Texas, made entirely of fiat currency, strikes planet Earth and bails out these insolvent institutions. That's what seems to be what they're banking on. They're by a divine intervention, because otherwise they will have eaten their own feedstock, they will have consumed themselves, cannibalized each other, and it's happening in real time. Now, of course, Donald Trump has complained that the Fed needs to compete with Europe's egalitarian, cannibalistic potentates of negative interest rates by cutting our rates by 100 basis points and restarting QE. You've mentioned that you think QE is going to start very, very soon. Can all the king's horses and all the king's mad men put our Humpty Dumpty debt economy back together again in any feasible way? Craig?
And the central bankers have done this to themselves, because they've seemingly been very pleased with their new role as these market saviors, that know everything, and they're, the demigods that the markets hinge on their every word. But see, the problem is now they're being revealed as only having this limited amount of tools, the Fed funds rate and interest on excess reserves and things like that. They're going to fall back to everything that they've done before. And people are going to figure this out and go, wait a second, hold on just a minute. I thought we were going back to normal. I thought, interest rates were going back to 4 or 5%, like Goldman Sachs was saying just a few months ago. And as these guys are revealed for the frankly, charlatans that they are, the world loses confidence in them. And as the world loses confidence and looks around at the global economy slowing, the German economy is a disaster. The U.S. economy is likely already in recession. And then you begin to think, well, all they're going to do is the same song and dance that they threw at it 10 years ago. Again, that just leads you down the road of not saving in dollars, not saving in euro, saving in physical precious metal instead. Look, I know we've talked about this for years, and there are a lot of folks out there going, oh, I heard all this before. Yeah, but this is the same situation now as before. We're going to new all-time highs in both gold and silver, and now is the time to recognize it and thus prepare.
When you fall off a cliff, it's only the last 2 or 3 feet that kill you.
Yeah, good point.
Anyway, let's talk about this. Can the Fed go negative? Can the Federal Reserve now go negative? It's the only really major bank that hasn't gone negative. It's something like 85% of all the positive yielding sovereign debt in the world is the United States Treasury at this point. Yeah. If so, is that essentially conceding Mark Carney's point that the U.S. dollar can no longer serve as reserve currency?
Well, they're admitting it, right? If you read their language, the little papers they put out and the speakers that they roll out, they used to talk about the zero bound. Okay, that was the big language 6-7 years ago. Now they call it the effective lower boundary, which is implying it's somewhere below zero. Now, I guess they could see some advantages to this, and in their group think in their ivory towers, they think that means that borrowing costs are less, and maybe it'll help the U.S. government hang in there a little longer fiscally. But that's just a fallacy. That's not the way the world works. And I think they're going to get a real rude awakening over time. This is just crazy where we are. Like I said in our previous episode, you and I have been talking about this since January. But even I didn't think that by late August, we'd be talking about this stuff already. But everything is moving so quickly now that it really makes you wonder that even by December, where the world's going to be. There's just no time like. People have to be paying attention. You can't just be whistling past the graveyard thinking that everything's A-OK, because it's not. All
right, so there's roughly $100 trillion worth of money under money management accounts, and less than 0.5% of that's invested in gold. The manipulation schemes are broke. Negative interest rates are here. and suddenly the swing toward demand in gold is here. So we're talking 2,500, 3,000 an ounce, I think, pretty soon, Craig.
Yeah, possibly. I mean, people say, oh, that's crazy. It's just a gold bug pumping things. No, just do the math. If you really understand these markets, know how they're leveraged and how little physical metal there is, and then start to think like we talked about. If the world just goes back to that mean and a 2.5% allocation to the precious metals, mining shares, whatever, up from 0.5%, think of how much cash that is looking for a home. And it's the same thing driving negative interest rates. Everybody's buying bonds and just buying them and buying them. Wait till that happens with mining shares and gold. It's going to be something to behold.
All right, beautiful. Craig Hemke, thanks for being on the Keiser Report.
My pleasure, my friend. All the best.
And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Craig Hemke of TF Metals Report. If you want to catch us on Twitter, it's Keiser Report or KeiserReport.com. Until next time, bye, y'all.